Welcome back to Kiwoon. My name is Caleb, and today we'll be going over Alibaba. Currently down over 60% from all-time highs, in this video, we'll be going over what makes Alibaba's valuation so enticing heading into the first quarter earnings of 2022 and answering the question that everyone's been wondering. Will Alibaba ever recover? Again, if you guys are enjoying the content, make sure to go and hit that like and subscribe button down below. Now let's get right into it. Alibaba no doubt has disappointed some investors in the past year, trying to go against competitors like JD.com and Tencent, but I think the company is now on pace to restructure how they are rebuilding their brand and increasing focus on the e-commerce industry. I believe that Alibaba is set to rebound very sharply this year, driven by two catalysts. The first, Alibaba's subsidiaries raising capital. You see, they did something in Turkey called Trendyol, and they raised over $1.5 billion, and the overall valuation of that, $16.5 billion. Over 85% of this was owned by Alibaba, and the $6.5 billion accounted for over 4% of Alibaba's market cap. Trendyol was just one of the many businesses owned by Alibaba that focuses on international e-commerce. So there's a lot more room for value to be harvested if other businesses, not only in Turkey, but anywhere else in the world, can actually be used as external capital. Another really main point of why I think Alibaba is going to have such a large comeback here is because of their cloud computing rising profit margins. See, Alibaba was never actually profitable based off of their cloud computing until this past year. And with them actually turning profitable and actually them growing from 4% to 10% revenue has been absolutely insane. This accounts for roughly billions of dollars, and cloud computing revenue growth has strongly outpaced many of the other segments. They believe that cloud computing revenue growth strongly outpaced that of other segments, and it will continue to grow even more strongly in the rising global needs for computing power. And I love comparing Alibaba to Amazon just because of how close their business models are, but as many of you may know, Amazon Web Services are huge. When you look at this here, Amazon Web Services make roughly 12.5% of Amazon's total revenue, coming in at roughly $40 billion. And I think that this could be a key factor when you compare it to Alibaba's growth with their web services, because although it may not be too apparent in the States, Alibaba is huge, reaching over 1.24 billion people in just the past 12 months, while Amazon sitting at just 310 million. Again, I know as Americans we like to go day by day, only think about Amazon and really what's impacting us, but when we look at the macro and looking at what and who all these people and all these businesses affect, Alibaba's hitting nearly 3 times, if not more than that, on a daily basis or on a yearly basis. Now don't get me wrong, Alibaba's not just seen only, roses and daisies over this past year. We've seen major US and Chinese regulatory crackdowns, whether it was through just the overall Jack Ma's empire, or whether it was their failing of their IPO earlier this year. And I believe that Alibaba has just garnered too much of these Chinese market to be trading at a sub 15 PDE ratio, especially when companies like Amazon are trading at easily double of that. Alibaba's valuation remains at near time lows, and investors' expectations have been getting crushed by continuous misses in earnings and downward estimate revisions. But when we look at Alibaba's earnings, we see that their earnings have really not been that bad. They have missed 2 out of their past 4 or 3 earnings, but if you look at their overall track, Alibaba has done relatively well. I really do think that Alibaba will have a very high probability of beating this next earnings, with a very high chance of them having really solid growth, again in those 2 main sectors, the cloud computing as well as the overall raising capital through subsidiaries. I think this is going to be really important for Alibaba in this next year, especially for Alibaba's growth. And I think just from a trading perspective, I know that Alibaba in the past 3 months have been essentially trading between this 112, 110, all the way up to this 130 area, and have not bounced once, twice, 3, 4, but I'm guessing it's going to be about the 5th time around this 112 area. Heading into earnings, it does look like a relative sell just because of the overall downward volume. But I do think if Alibaba puts up some really solid numbers, that at the numbers that it's sitting at, Alibaba could be possibly the best discount of any stock over the next decade. And yeah, guys, that's basically all I really want to go over. I really do think that if you guys haven't looked into Alibaba, just check out some of our other Alibaba videos that we've done talking about the business model and fundamental understanding of what this company really does. And yeah, I hope you guys have a great rest of your day. If you guys have any questions about Alibaba or just stocks in general, make sure to leave them down below. And peace.